You are looking live at a daily chart of the Nasdaq, which advanced 168 points today, or 0.95%, and closed at 17,857. And the volume was 0.9% above the 50-day average daily volume. So for all those people complaining about the volume, there you go. The Nasdaq continues this kind of a melt up, and we are in a seasonally strong month of June and July here, and I expect the rally to continue, although I would expect, to see something like this, a pullback of a couple of days here. We had one in this rally here, earlier in the year, and then since the April 19th rally, we had one pullback to the 21, but this index continues higher. It is a leading index by a wide margin. It is now 2.5% above its 10, 4.3% above its 21, and 8.3% above its 50. I just want to point out something here. The moving averages are rising very quickly. As you can see here, just last week, what's the date today? 17th. So we'll go to the 10th. Okay, so the 10 EMA was at 17,001. And we fast forward, a week, and you can see that 10 rising here. And today it's at 17,428. So it's risen 427 points, in a week. So at that rate, it won't take much for it to catch up with the index if it just goes sideways for a couple of days, which I expect it will, and it did Wednesday, Thursday, and Friday of last week, but today it had other ideas and went higher. And we know what's driving, the index higher, and I'm going to get to that in a minute. But I will look at the S&P because both of the Nasdaq and the S&P hit all-time highs and closed at all-time highs. This one was up 41 points, and I don't know why this is showing this, but anyway, I guess it's all right. Yeah, it was up and 0.77%, so just a tad below the Nasdaq. Anyway, I'm going to get out of these indexes. The Russell, yeah, had a good day today. Maybe it'll start to perform, hopefully, as the rally starts to expand a little bit and spread out. The small caps will get some love, and it was up 0.79% today. So good day on those indexes. What drives the Nasdaq and the S&P are stocks like Apple, up another 2% today. And we have to consider that next week is next Friday is the last day of this quarter. So we're going to close out the quarter on a week from Friday, and this Friday is Quad Witching Friday, which is the third Friday or the last Friday of this second quarter. So there will be some volatility, but we have to expect that portfolio managers and fund managers have to own Apple. You have to own this. It's like in the 70s, you had to own IBM and GM. And now you got to own Apple. If you don't own Apple in your portfolio and it's had this big run, you're going to get fired, or people are going to be asking questions like, what the heck's the matter with you? Also, Microsoft is another one that I should have put this on our Reddit list. I don't think I did. I was going to, but I stayed away from it. But it did have a nice move today, 1.3%. Still actionable, I believe. And once again, this one's going to have to be bought, even though it's owned by, 10,300 funds. Funds are adding to it, instead of taking away, they're adding. So once again, you have to have Microsoft in your portfolio. And I think this trend kind of continues into the end of the month. NVIDIA is another one you have to own. Those three you have to own. Yeah, it was down today, negligible, but after the 10-for-1 stock split, it was up 9% last week. Yeah, 9.09%, I believe it was. Yeah, 9.09%. So you give a little smidge back today, but this one is still needs to be owned, and it's under owned, I believe, in comparison to Microsoft for sure and Apple. So I still think that fund managers want to own NVIDIA, of course. And then we have Meta Platforms, which I had on our ready list, and it's just marking time here. As long as it stays above 500, I like that. Above its moving averages, it's the 10 and the 21 have now crossed above the 50, and those are rising. So Meta looks good following its sell-off from the most recent earnings report. Anyway, Google, another one of these mega cap tech stocks, had a decent day today. It looks like it's just, forming a flat shelf, a flat base there, a shelf pattern, and then Amazon, another one must be owned. Just consolidating in the base. You could see the moving averages there. The three moving averages are converging, all within 0.6% of each other. So that usually it indicates tight trading, and in this type of a market usually resolves to the upside. So we'll have to wait and see. Anyway, I'm going to move on to the reason for the move today was Taiwan Semiconductor announced they're raising prices, and what that did was it not only sparked a rally in some of the semiconductor names, but also in a lot of the hardware names, which I'm going to get to here in a minute. But Taiwan Semiconductor up nearly 3% today with above average volume. You can see 32% above average, the 50-day average volume. And just making a powerful move here. Broke out of that double bottom base, pulled back to the 21 one time, found support, and now trending higher. So Taiwan looks fantastic. AVGO, Broadcom, one that I'm going to feature a video on Wednesday because the market's closed. I'm going to make a video on stocks that have broken out of bases during this past second quarter earnings report. Some of them have done well, others have not, but I'm going to highlight 20 of them. Broadcom will be one of them, as they announced a 10-for-1 stock split, gapped up more than 12%, followed through on Friday, and then followed through nicely today, 5%. So people are embracing these stock splits, as it broke out of this double bottom base here, just rammed higher, man. That's a heck of a move. Yeah, like I said, there's a lot of these stocks that are doing well that have broken out following their earnings reports. And like I said, I'll highlight those on Wednesday when the market is closed. So look for that in the education center. AMD is not participating, just trending lower. You can see the 50 trending lower, the 10, crossed through the 21. This is, the 200, this is looking like a mess, but it's just consolidating here, forming a base. Doesn't have the growth that these other companies are showing. So, the AMD not getting the love, but Applied Materials, as some of these equipment makers are really doing well. Applied Materials broke out of this consolidation and made another new high today. That one looks good. ASML, another one. Semiconductor space, still consolidating within a base. It pulled back to the 10 last week and found support, and today was up 2%. So still trading near a buy point there. I like ASML right there. And then not a semiconductor stock, but a hardware name, CAMT. This one made another new high today. Just a beast. We had this on our ready list when it was right there about 90. I thought it would have trouble with 100, and it kind of did. You see, it went above it and then pulled back to 100. It just pulled back to its 21, and now blasting higher. Man, it's at 120. It just blew right past 100. Unlike some of the other names that we saw, like Vertiv Holdings, because there's no base here. It doesn't have any base. It ran. Now pulled back, went above 100, pulled back to the 50, and now the 100 is resistance, and it just forms a base. That's fine. I would be very happy if it could just form a base and give us another opportunity to buy. So that one is not participating, but SMCI is intriguing me here. To me, this looks like, if you will, just kind of bear with me a minute. This is like a bottom here, rallied up, then made another bottom there at 611. Then it, kind of is forming this bottoming pattern, and now trading higher through its 50. So that looks to me like a double bottom base pattern, still, well within the base, still consolidating, still needs to get above that 972. And then, of course, the 1077. It's got some resistance levels, but I am liking SMCI here. And its next hurdle, like I say, is to get through 972. It's 80 points away. It can get there in a heartbeat, the way this thing moves. But that one looks good. DELL, it sold off with earnings. It had this gap to fill right here. Following its earnings report, it filled this gap from May 14th, where it gapped up from the 134.69. The gap was at 138.66. So it came down following earnings and filled that gap. Now it's driving through its moving averages. It just pulled back to the 50. Now it's driving through its moving averages, has a gap to fill here at the low of 165.11. And who's to say it's not going to get there? You have to be open-minded and flexible to all possibilities here. We're in a strong uptrend. Stocks can go a lot higher than you may think they should go or will go. and they just kind of managed to do that. Arista Networks is another one we had on our ready list last week, but this man, it exploded last week and followed through today with a 3.5% move. So Arista Networks looks good. You could definitely see the pattern there, the pullback, the shakeout before the breakout, especially when they ramp from the bottom. We got more stocks that to look at here that have shown that characteristic recently. Okay, so that's Arista Networks. I'm going to move on. I got Dell. Oh yeah, the data storage group. Micron. This is one that kind of rallied straight up from the bottom, then had a nice shakeout down to 121, and now it's just ramping higher. They had like 3 upgrades today. So institutions are buying. How do I know? Well, I go to the weekly chart and I see these big blue volume bars here. Had a couple of them the last couple of weeks, and now this week they're back at it again. They're back buying Micron. This whole group, I like the entire group. Pure Storage has an investor day this week, I believe, with Jensen attending, expecting some fireworks there. Charlie Giancarlo's, he's an entrenched OG in Silicon Valley. I'm sure he's got some tricks up his sleeve for investors this week. So pay attention to Pure Storage. We had it on our ready list. It's extended, but maybe a pullback to the 21 and you can get some action there if you're interested in Pure Storage. WDC, Western Digital, another one of these computer data storage. This is the strongest group on the market right now. And this one had an ascending base where it just kept making, higher highs and pulling back. It made another higher high, then pulled back. So higher highs and higher lows. And now it's kind of trending higher. It was up over $80 today, I believe. Yeah, so it's just trending higher. It's just surfing its moving averages and trading higher. STX, which is Seagate. There's your move off the bottom, pull back to the 50. We've seen this a lot. And then they just find support and just blast higher. And this one's extended now, made a new high today. Here's one that's not extended, and I kind of like it. Excuse me. It's been in a base for a long time, which that doesn't matter. I mean, could be a 6-week base or a 60-week base, but it's consolidating here and trading sideways, tight closes, near a buy point. You can see last week it pulled back, a little bull wedge pattern there. I like Silicon Motion, SIMO, and then NTAP is another one in this group. This is just a super strong group. And this one is just, it broke out. We had this one, I think all of them on our ready list, but they're all, extended now. So if you missed it, how do I buy it? Well, you got to wait for a pullback to a moving average, and there's your opportunity in a strong uptrend like we're seeing. And this is definitely one of those stocks that, blasted higher in March and then pulled back, formed this double bottom base, had your chance, and now it's adios muchachos. She gone. All right. So anyway, that's enough of all that hardware and semiconductor names, don't you think? I want to go to the retail restaurant group. CAVA. I know people get tired of me, posting the same, restaurant stocks, but these are the newer names that investors want to buy, the big institutions, they're tired of buying McDonald's and Starbucks and they want some new merchandise. And CAVA is certainly one. You can see this IPO basis ramping higher, earnings ramping higher. The group is a top 20 group. There's room for growth. There's nothing not to like here with CAVA. I mean, if you like stocks that are going higher, that are trending along their moving average, that's a Kelly Slater stock I've ever saw when it's just surfing higher. There's nothing to do here but watch your money grow. Bros, this is another one that just exploded off the bottom, right? Straight up from the bottom. So it had to pull back. There's going to be profit takers. Pull back to moving average, found support. Pull back to the moving average, found support. Pull back to the moving average. Today, it found support again. So this one keeps finding support, even though it had a secondary offering. Dutch Bros looks good to me, bro. And then CMG with their massive 10 gazillion for one buyback. It's 50 to 1. I think you have to own it by the 18th, which is tomorrow, to qualify for the split, which is the 24th, which is next Monday, I believe. So there's a couple days lag there and this thing was up nearly 3%. People want to participate in these splits. So people are scrambling, looking around for stocks like Deckers and Eli Lilly, who have the possibility of splitting, or ASML, like Broadcom, like NVIDIA, like Chipotle. They've done very well with the announcement of these stock splits. So people take notice of these things and, try to front run them. But CMG looks good. Okay, more retail names. CROX. This is one that I had to own because our friend Mike Webster calls me Mr. Crocs. That's not why. It just, it broke out of a base and I missed it. Then it pulled back to a moving average, so I had to buy it. But this is a fairly inexpensive stock. If you look at their, expected growth rate, but it's got a 9.6 billion market cap, and you can see it's doing more than $1 billion a quarter. So it's trading about 2 times sales, which is not expensive, even for a shoe company. And they've hired this guy from Stanley to run their Hey Dude. And if you're paying attention, Hey Dude's making some announcements recently, collaborating with some companies. So maybe Hey Dude's got it in gear and getting in the right direction now. CROX management is very aggressive, very progressive management team. So they're not going to sit idly by, and they're going to do something about Hey Dude and fix their problems. And on holdings, another one. Whoa, what happened today? Pull back to the 21. Okay, that's fine. Found support. Sometimes on days like today, when everything's, people are getting excited, I like to look at stocks that are pulling back, just finding support at moving averages, not completely selling off and slicing moving averages like we saw with LPX. You don't want that with the heavy volume move. No, I'm just talking about these little moves lower, like we saw with NVO today. This is an interesting move for me. I own this one, but I could add to it here. It just pulled back a little bit, lighter volume. I'm going to get to that one in a minute. I digress. Anyway, on holdings, pull back a little bit. Deckers, I mentioned this one as definitely a split candidate. Just pulled back to the 21. It didn't participate in the rally today. Does that mean it's a crappy stock? No, it's just pulling back in lighter volume. You can see the trade down here, the going up on these big blue bars, and all the selling days are below the average volume. So yeah, Deckers is going to be fine, I think. Okay, and the last retail name I'm going to show is ELF, because I like the setup. I put it on a red list. I'm a little hesitant because I think it's going to have trouble at 200. But man, in this market, the way stocks are performing, it wouldn't surprise me to see it just blast through 200 and 221 and just make new highs. That wouldn't surprise me. It also wouldn't surprise me if it pull back to its 50. But right now, it's just consolidating. It's got that 182 area that I like. Higher lows here, kind of flagging a little bit. Maybe it'll tighten up. I'm not expecting big things here below 200, but I'm definitely long ELF and watching ELF for an add. And anything could spark this thing, upgrade, raise guidance. I mean, new announcements. They're growing into new markets here rapidly in Mexico and Italy, Canada. One thing you have to watch out for ELF is their manufacturing is in China, and they don't sell anything in China. They don't sell anything in the East, but they're very big on TikTok, and they could enter that market if they wanted to. But the tariffs, you hear about the tariffs from our administrations, and further tariffs, they did say on their conference call, will impact their margins. They're still selling well. It's just going to cost them a little bit more. That's all. Like a tax essentially, but their business is great. They can't help, if the government puts more tariffs on, but it is something to watch for with ELF. But their business is, gangbusters. Anyway, enough of the retail. I got to talk a little bit about, ETFs. People say they want to own an ETF because they don't want to own drug stocks because they have these, failed trials and the stocks blow up. They're down 90% in a day, and nobody wants that. So I understand people want to own, the XLV, which is setting up here in a nice base. And the last few days making this little bull wedge pattern as it trains down to its 21 EMA. But I got to tell you, I don't buy ETFs because I don't know, it's my ego or something. I think I can do better than some of the top holdings in XLV is Johnson and Johnson. Do you want to own that? I don't. Pfizer's another one. Do you want to own that? I don't. That's in a complete downtrend. Another one is United Health Group. I don't want to own that. So why not just own the best stock of the group, Lilly, and take your chances, with a failed trial. By the way, there's a diabetes conference this weekend in Lilly, Novo Nordisk, Dexcom, all the diabetes plays will be there showing their new products and also showing new data. And I believe Lilly and NVO are going to show some really strong data because they spend tens of billions of dollars on research and development. They're not just twiddling their thumbs. They're always trying to get better and improve. And I think they're going to flash very strong this weekend. Something to watch for Eli Lilly. So if you're owning an ETF, that's fine. You protect yourself from the earnings risk, but you get the losers with the winners, and I'd rather just own the winner. I did mention blow-ups on trials. This is AVTE, which had a failed phase 2 trial, won their only drug, I believe, and they have nothing in the pipeline, down 93.3%, essentially going out of business right here. It traded down from, what did it close at Friday? About $23, $24, $23 down to, $1.65. Thank you very much. And that's why people buy ETFs in this sector. But you're going to miss out on things like Eli Lilly. I did mention Novo Nordisk. It just pulled back slightly today. Senator Bernie Sanders has been trying to get one of their executives to come, and they were going to subpoena, one of their executives. And then the CEO stepped in, Lars Jorgensen, said he will come and talk with senators on Capitol Hill about why is the price of their drugs so high? Pretty easy to tell them. They spend tens of billions of dollars in research and development, bringing these drugs to market, not to mention launching these drugs, getting, by the FDA. There's a big process to this. And if people don't want to pay for their drugs, they won't. But it seems to me like they're happy. But it's an election year, and Senator Sanders is, doing his thing to show that, he's trying to keep drug costs down. So I understand that. But CEO Jorgensen, he's a sharp cat. And, I think it's a nothing burger, but that's why it was down today. Over the weekend, Bernie Sanders says there's no more need for a subpoena because Lars Jorgensen is coming to speak with the senators about their high drug prices. So I believe it's a nothing burger anyway. Has nothing to do with their sales. All right, I'm going to get off the drug thing. I'm going to go to, so I've talked about all these stocks that are doing great, but some of these auxiliary AI plays, energy plays that were doing so well, now have pulled back. So there's just profit taking. Okay, so there's a base here, it runs up, forms another base, makes a new high, and then that's why it's dangerous to buy near new highs. Now you get the pullback to the 50 and the bounce and more weakness. A VST, which is another one of these nuclear energy plays. Bill Gates said he's going to spend a ton of money on nuclear energy. I thought it might help this market today, but it didn't, because this stock just does not have a base. This is why I like buying stocks out of bases, because there's just no base here. There's nothing but sellers, profit takers, and it kind of like becomes like a snowball effect. Like, well, gosh, I could have sold at 107 and I didn't. I could have sold at 100 and I didn't. I could have sold at 90 and I didn't. Well, maybe I'm going to sell now at 84. But this stock just needs to form a base. Finally, GEV. This is GE spinoff. Just pulled back to the 21 today. But these stocks were weak. The energy stocks were weak, including First Solar. When I put a ready list together, I try to get a variety of different groups, because you never know where the rotation is going to, and it's definitely, this is the third day in a row pull back to the 21. That's actually an area of interest I like, near an old buy point there for First Solar. So this is what I'm talking about. Can embrace these pullbacks. That looks like a pole with a little flag pattern. First Solar looks good to me. And the other one that I like is NXT. I know it's down today because energy was down, but it just pulled back to its 10. I mean, come on. Anything above the 21, I'm fine with. This just pulled back to its 10. Embrace pullbacks, that's all I can say. FRO is one, the oil and gas stocks have just been, they have not been strong. So anyway, had to show some weakness with all the positivity, but I'm going to get back to some of the software names. Software's been super tough, as the hardware is bleeding into some of the software responsibilities here with AI. So you got to really be careful. This is GWRE, which will be on one of my video that I've talked about that's coming out on Wednesday. Ramped following earnings, it ramped up 18% with volume, and it's still holding above the 10. So that's what you like to see. Spotify, another software name, just consolidating in the base, pull back to the 50 last week. This one looks fine to me as well. You got to allow these things to consolidate, and I like bases, so just hang out in the base, and I'm okay with that. Another one is ALAR. This is an Israeli-based company, software security like, CrowdStrike. Pull back to the 21 today, 5%, while CrowdStrike looks good. This is another one that was on my list here for next week earnings, 12% move, and it's still trending above the 10. So if there's one cybersecurity stock that I want to own, it is CrowdStrike. Another one that I have not mentioned too much, I know I mentioned it, but IREN, this one has had several gaps higher following earnings. There's a 16% move. And what happens here is, it's heavily shorted and shorts get trapped on the wrong side. And, the shorts start to cover, and there's another 13% move. This is becoming a regular thing. 20% move on the 11th. Yeah, 9.7% move. Close near the lows, another 9% move today. So, yeah, made a new high on Thursday, 1495, pull back on Friday. And now again, wants higher prices. I like it above the old high from last week. If it can trade above 1495, I'd say that would definitely be a place where I would like to dive back into IREN, Iris Energy. Like I said, it's heavily shorted and the shorts are getting out. They're kind of trapped. And so every time it comes down a little bit, if I can go to like a 15-minute chart here, yeah, every time it goes down a little bit, it gets bought. And so, that's shorts covering. Every time it goes down, it gets bought. It goes down, it gets bought, right? It goes down a little bit, it gets bought. It goes down a little bit, it gets bought. It goes down a little bit. So those are shorts trying to get out of there, trying to take advantage of every little downtick. We don't know how long that squeeze will last, but I do like it above 1495. All right. I did mention I'm going to do the video Wednesday on some of these names. I'm just going to go over. This is Transmedics. The second quarter earnings reports are essentially over. I'm going to pick out 20 of the winners, and I'll show you some losers as well, but 20 of the winners that are performing well. TMDX blasted out of a base 25% on May 1st following earnings, and it's just trending higher, and that's what you want to see. It doesn't have to keep going, up and up and up every day. Sideways action, pull back to the 21, gradual. That looks fantastic. ASPN is another one, ASPN, this one gapped higher. 56%, that's not a bad move, right? And it's just gradually going higher, pull back to the 21, got support, pull back to the 21 today. So it looks like below 30 now is, a good opportunity for that one. So there's just a lot of names that are doing well. I got into a beef with people over the weekend who were saying the market, there's so many negative people here. I mean, wake up, folks. I mean, we're in a strong bull market, and this is the time where you can make generational wealth, and don't be negative about it. You reap what you sow. If you're negative, negative things are going to happen. If you're positive, hey, maybe HIMS can go to 100. Let's buy HIMS. Look at it. Broke out. It can't even come back to its 10. I think it's trading at its 8 EMA, and it's pulling back to the 8. Another one of these strong names. So ELF is another one that broke out following earnings, one that I'm watching, getting support at the 21. This one looks fantastic too. And I did mention, I've got a lot of them, not going to give them all away, but I did mention LPX, and that one, yeah, that one's not doing too good. Yeah, it happens, right? I believe Carvana was another one the guy was mentioning. This is a leader. It broke out and then pulled back to its 50. So what? Not ideal, but still looking okay. Another one that he mentioned was Moderna, which I don't deal with Moderna. It's too political for me. And yeah, okay, so it doesn't look good after its breakout, but I'm going to show you 20 that do. Okay, so we're going to stay positive. Look at the positive side. You want to find negative stuff, go ahead. If you want to short, I don't play that game. Anyway, that's it for me. Thank you for watching. Except for in honor of the great Steve Jobs, I have to add one more thing, and that is Lennar posted earnings tonight, and it was pretty good. It was like I believe it was 15% sales growth, which is accelerating from negative to +8, +13 to +15. So that's going in the right direction. Gosh, there was a few things that I read in the report. I'll have it in the morning, but it was a good report. And sometimes, stocks act a little wonky around earnings reports, but unless they said something on the conference call about, rates or yields, or I don't know, something going forward that was negative, I would expect that report to allow it to trade back above the 50 and get back above the 160 level. Anyway, that's it for me. Also, KB Homes reports tomorrow, so these home stocks will be affected by this these two earnings reports, I believe. Pulte down a little after hours, and DR Horton is the big one, down a little bit. So okay, we'll have to just wait and see. I'll have more in the morning. And anyway, at mcstockcharts.com, we never give up. Thank you for watching.